Hello everyone, welcome back to Current Economy and Investment Insights. Today being June 9th, 2014. We have Paul Munichel from Wells Fargo and Palos Heights to give us a recap of what happened last week with the trading floor and a whole lot of other stuff that went on, Paul.
Absolutely, Ron. Let's go over it. Let's start by reviewing how the market reacted last week, ending on Friday, June 6th. We did see stocks close out the first week of June trading on a positive note. The Dow increased 88 points on Friday to another record high of 16,924. The S&P 500 also closed at a new all-time high as it gained nearly 9 points to 1,949. The Nasdaq was up 25 points to 4,321. The major averages advanced thanks to weekly data showing U.S. employment returned to its pre-recession level. Employers added 217,000 jobs in May, which was above expectations and marked the fourth straight month that payrolls rose by at least 200,000. In addition, the unemployment rate held steady for almost a sixth-year low of 6.3%. 7 of the 10 S&P 500 sectors finished higher. Industrials and energy paced the advance. General Electric rose 1.4% to 2714, and shares of Schlumberger jumped 1.9% to 105.83. Utilities and telecom lagged behind as investors shield away from defensive issues. SCANA lost 1% to 51.29, and AT&T declined 0.3 to 34.99. Overall, the Dow increased 1.2% last week, and the S&P rose 1.3%, their third straight week of gains. The Nasdaq was up for the fifth time in 6 weeks and finished with a weekly advance of 1.9%. New York Stock Exchange composite volume totaled more than 2.8 billion shares on the New York Stock Exchange. Advancers beat decliners by 3-1 on issues and on volume. The Nasdaq was 5-2 positive on issues and 2-1 positive on volume. Treasuries, they edged lower. The 10-year note fell 3/32 to yield 2.6%, and the 30-year bond declined 2/32 to yield 3.44%.
And CNNMoney.com also reported this morning, forget the notion of a slow Monday. They are saying the announcement of deals and bidding wars is giving investors a lot to digest and trade on this morning. The Dow Jones Industrial Average and S&P 500 and Nasdaq all positive in the early trading. The Dow was up 15 points, approximately, varied from minute to minute. The Dow and the S&P 500 closed at a record level on Friday and appeared to be on track for more history-making highs today. The Dow, as of a few moments ago, was a plus 23.71, Nasdaq a plus 11.78, and the S&P 500 was a plus 2.97. While stocks are moving up, volatility or fear in the market is back to low levels not seen since 2007. The VIX index fell below 11 Friday for the first time since before the financial crisis. It edged slightly above 11 this morning. Paul, it sure is a solid movement forward now.
Yeah, I mean, it's
moving
a great,
up.
The summer months are sometimes concerning for investors, the whole adage of sell in May and go away. It hasn't really worked in the last couple of years, and so far this summer, knock on wood, it hasn't worked. We're improving, as we already mentioned, creating new highs. The VIX index is lowering, which is a gauge of risk or fear in the market. So yeah, things are looking all right.
And even across the pond, the international stocks were reporting European markets are also quiet and relatively flat, with the FTSE up about 100, which is about 1.2%.
There were some interest rate changes overseas last week, and that may be some of the reason why we had the rally here, because their markets rallied on that news.
All right. Asian markets all ended up with gains. The Nikkei in Japan rose by 0.3% after official GDP figures for the first quarter were revised to show the economy grew at a stronger than expected rate. of 1.6% compared to last quarter of 2013. The previous estimate of a GDP growth was 1.5%. Even there, we're doing well. I know the only other thing I wanted to mention was crude oil is hanging in at $104.09 a barrel. That's up $1.43, and unfortunately, that's going to keep our pump prices up a little bit higher. If it stays in the $100 bracket, it always hangs in, the gasoline hangs in at around $4. If it gets below 100, I noticed it will break $3.99 and get down to $3.70, $3.80. In some areas of the state of Illinois, it varies as well. Going further south, it usually drops. And of course, going to Wisconsin, because of tax differentials, it's about 60 cents cheaper per gallon. So it just varies everywhere. So what we're seeing is that as long as oil stays at it where it's at that same level, our pump prices pretty much will stay the same. So stay with us. We're going to be going into investment insights. Paul's going to be talking about doing a makeover on your portfolio. Stay with us. It'll be interesting to hear from him. Okay, we are back with Investment Insights, and we've probably all seen some type of makeover show on TV, and basically we're going to be discussing a financial plan that needs a makeover. And Paul, where do you really start with something like that?
Well, generally with makeovers, you feel better, more confident when you're sporting a new look. So sometimes even the smallest changes can make a pretty big difference in your attitude. So doesn't your investment plan deserve that same kind of attention? After all, someday it's going to be taking care of you.
Well, give us an example of a plan that has a makeover in it.
Sure. Perhaps your portfolio is overweighted in stocks, or maybe you'd like to spice up your portfolio with commodities. Whatever you have in mind, it's always a good move to regularly review your investments and make decisions about your financial strategies.
And what should an annual review actually include?
Well, several things, but a typical annual review compares your portfolio's annual performance against a broad benchmark, such as the S&P 500 index. But, Wells Fargo advisors, our clients can perform a more valuable analysis by incorporating a traditional review into our Envision planning process.
Okay, and what is a Envision process, and how different is it?
Envision is a process we at Wells Fargo advisors do for our clients, and rather than simply comparing results against impersonal benchmarks like an S&P 500, an Envision year-end review analyzes your portfolio's performance in the context of your own goals and priorities. The Envision process creates a customized, personalized benchmark for each client. Wells Fargo Advisors Strategic Solutions Group oversees these, and they let you know how you're doing towards achieving the things that are most important to you. So to help put your financial priorities in perspective, ask yourself, 3 basic questions.
All right, have my priorities changed in my life? It would probably be one of them, and I know it has happened for me and has happened for many, many other people. So how do you address that?
Great question, and you're right. That's a priority that, almost everyone at some point in their life, priorities change. So your investing strategy is built around long-term goals, but priorities can and will change with major life events such as getting married, having a baby, getting a divorce, or getting a new job. If you've experienced a major life change in the last year or so, consider its impact on your financial priorities. So for example, if you welcomed a child or grandchild into your family this year, starting a college savings fund might be a significant new priority. But saving for that goal could mean compromising in other areas such as retirement planning.
All right, can Envision process help with this then?
Absolutely. Because the Envision process is built on prioritizing numerous financial goals, you'll be in a good position to make adjustments and accommodate new, more pressing priorities. So when your life changes, you don't have to blow up your plan and start all over. Instead, it's all about incorporating those changes into your existing plan.
All right, now, what would be the second question investors should be asking, Paul?
And they want to be asking themselves, am I still on the same page with my money goals? So once you reviewed your goals and priorities, examine whether your portfolio's returns are keeping you on track to meet them. Again, our Envision process makes it easy to gauge your process from one year to another. Instead of using a single scenario, your financial advisor can help you develop a range of scenarios for your investments, from ideal, that's living the life to the fullest, to acceptable, that's compromising on some goals so you can achieve your top priorities.
Well, again, it seems that the Envision process is available too. What would be the third question then?
Third question people want to ask themselves would be, does my plan need a new look as well? So changes to your investing strategy will depend in part on the answers to the previous two questions. But even if your priorities haven't changed and you're making good progress towards your goals, it's still important to review your asset allocation and investment strategy.
All right, give us an example, Paul.
Well, for example, you're now 1 year closer to retirement. Depending on your age, it could be time to start adopting a more conservative allocation. Or market gains and losses may have caused big swings in the value of your holdings, causing your portfolio to fall out of line with your recommended allocation. In this case, you may need to rebalance your portfolio to bring your stocks, bonds, and cash holdings in line with their target allocations.
And again, I bet a review is really vital after making any of these changes.
Again, you're exactly right. A regular review and rebalancing is important to help any portfolio stay on track. And even if you make only minor tweaks, you will avoid a common pitfall for many investors, and that's never updating the plan they've created. Change is the number one thing that clients have to manage. So it's good to check in at least on an annual basis to say, hey, is this plan okay? Has it done what it's supposed to do, and is it ever evolving?
Paul, as we say in the previous shows, you really need to have some guidance on this. You do make changes, you think you want to make changes, and you do make them, then you need to make reviews, and it needs to be done at least annually, semi-annually, maybe even quarterly, depending on your portfolio demands,
Right.
or your objectives, rather. Paul, we're going to put your number at the bottom of the screen so that in case the viewers have any questions, so that they can get in contact with you, you can address them accordingly in your address where your office is at. Paul, is there anything else that you wanted to mention? Is there a conclusion to any of this?
No, I mean, just if we did something today we usually don't talk about a whole lot, and services offered at Wells Fargo
Right.
Advisors. We try to keep that out of most of the shows, but we did talk about Envision today, and it is a nice tool that I have access to, of course, being an advisor here in Palos Heights. And it really does break down a client's objectives and goals very clearly, and it scores your progress in keeping those goals. So making changes, we make them where they're appropriate to keep you on track with those goals.
Very good. And actually, that software probably will print out a report for
Absolutely.
the client, and you have a copy, and the client has a copy to refer back and forth to, so that's excellent. Paul, you have some complaints that you need to share with the viewers?
Yep, just the usual disclosures today. Investments in securities and insurance products are not FDIC insured, not bank guaranteed, and may lose value. And Wells Fargo Advisors LLC, member SIPC, is a registered broker-dealer and separate non-bank affiliate of Wells Fargo and Company.
Okay, for Paul Munichel with Wells Fargo, myself, Ron Jankowski with Channel 4, we wish you good investment day.